Hi everyone, welcome back to Be Rich. Surprise, surprise, surprise. I bought Anand. Anand was in the studio and I pinned him down saying, no, you have to come to Be Rich. You have to come and give me a little bit of support today because today is a very interesting topic. It's a controversial one and it's always good to have Anand's opinion on this when I'm talking something as controversial as the ones you guys asked me to talk about. Today is all about big tech and it's about growth stock. I always abhor this because the reason is most of the time these things are always considered to be overvalued, or like Anand says, diamond needles. But since a lot of you have been asking about these specific diamond needles and overvalued stocks, but there is a philosophy which I should not discount. I should be fair and just in my assessment. There is a philosophy that believes in the long term, markets are always pulled up and brought to life through these growth stocks in big tech. For example, even recently when the S&P 500, we were looking at saying it's still positive. Anand repeatedly told me, boss, it is just a few stocks which are holding the S&P 500. If you remove those stocks, S&P 500 is negative, which is absolutely true. So there is a case to be made here that if you look at these big tech and you look at these FANG and you look at these growth stocks, that in a 10-year period, 15-year period, these are the ones that really give you a portfolio, that nitro boost, as we see in Fast and Furious, where he touches that button and then the car goes crazy and the scene builds up. I personally don't not a strong believer because I'm in Anand School of Investing, Warren Buffett School of Investing, where we do not assess things like this, like growth stock and big tech and all that. We try to be a more balanced approach and we look at businesses. But since you guys have asked me to talk about these companies, I thought I will bring. So Anand, what do you think about this concept of growth stocks and tech stocks, especially these FANG, Facebook, Amazon, Netflix, Google? Are they the kind of companies, no matter what price, looking at 10-year horizon, you just should blindly buy them?
There are two, three things I would like to say.
Hmm.
One is I would quote the great Howard Marks.
Hmm.
Howard Marks was in 1970s.
Hmm.
There was a time when there was a stock called Nifty 50s.
Hmm.
Stocks which you were now talking, which were the big stocks of those days. One of those companies was Polaroid.
Hmm. Correct.
So these stocks, and Xerox was one of them.
Yes.
And so the way you are talking about these companies today
Hmm.
was the way they were talking about those companies.
Okay.
And in came Paul Volcker and increased interest rates.
Hmm. I'm
And then
crushed.
and crushed Nifty 50s, and nobody talked about Nifty 50s again.
Hmm.
There is another example I would like to give you.
Hmm.
There was a company called Cisco,
Hmm.
which still exists,
Hmm.
and a company and a chief executive called John Chambers.
Hmm.
You just go and check in 2008 what was the price of Cisco
Hmm.
and find out where is the price of Cisco today.
Hmm.
And then when it crossed the 2008 price,
Okay.
right?
Hmm.
So
So
what
that
I'm
means if you believed in the Nifty 50 in 2008, you bought it, you would have been waiting for a very long time
it's
to.
still not. I don't think still Cisco has
Okay.
gone past that 2008
2008 peak.
peak.
Yeah. Okay.
Okay, so we are not talking of companies going bankrupt
Hmm.
and getting finished.
Hmm.
You can buy a great company. Cisco is a great company.
Yeah. Still is a great company. Yeah.
Yeah. So you buy Cisco at a very high price,
Hmm.
and you can wait for nearly 20 years for it to come back to where you bought it.
True.
So 20 years is a long time.
Very long time.
So it depends on where you are in a credit cycle,
Very true.
because it all depends on which portion of the what is the cost of money.
Hmm.
You have to understand from the year 2000
Hmm.
till recently,
Hmm.
you were there at a situation where the cost of money always went back to zero,
Hmm.
right?
Hmm.
Because it was a declining interest rates.
Hmm.
So whenever there was a crisis, the Fed would cut rates,
Hmm.
it would go to zero.
Hmm.
And even when there was zero, there
Hmm.
was a crisis,
Hmm.
they would print money and call it TARP
Correct.
and keep pumping money into the
Yes. Then
system.
they had quantitative easing.
Then they had quantitative easing,
Yeah.
okay, where they just printed money and gave to banks.
Yeah.
And the banks kept it themselves or lent it only to ultra rich guys.
True.
And because the money did not leak into the system, inflation did not come, interest rates didn't have to go up.
Hmm.
But in case of the pandemic, they had to distribute free cash.
Yes.
And then that cash started inflation. That inflation has not yet come down under control
Hmm.
after 4 years,
Hmm.
after 2 years.
Hmm.
So what was zero
Hmm.
went to 1%. That's a 100% increase.
Very true.
One became two. That's
Yes.
200% increase. Two became four. Another 200% increase.
Yes.
From 0 to 4 was a 400% increase.
Yeah.
That means if you are paying $1,000 in planned up paying nearly $4,000 to $5,000 interest.
Yeah.
So what I'm trying to tell you is when the cost of money becomes real, that's when it hurts.
Okay.
Now, in all this, what we are talking,
Hmm.
we do not know the end when the end will come.
Hmm.
But if you ask me whether the end will come,
Hmm.
definitely it will come.
Hmm.
Nothing lasts forever.
Hmm.
Intel is in trouble, serious trouble.
Yeah, they're in trouble. Yes.
Intel is in serious trouble.
Yeah.
It's a company, if you ask me, I would have said would have never got into trouble.
Correct.
Right?
I agree. But the argument which is always made by everyone on the other side of the fence is you're only talking about purely on finance and interest and all that. But if you're talking about where technology is, where the market is taking these companies are so big, they're creating marketplace. Like Google is creating,
There was
like
nothing bigger.
Netflix is creating
There was
this.
nothing bigger than Intel.
Yeah, at one point, yeah.
Because every bloody machine you had
Yeah.
had an Intel inside.
Correct.
Right? They just they didn't catch the shift from laptops to
Yeah,
mobile.
I think the biggest hammer came when Apple moved away from them. Till then, Apple,
They missed they didn't make microprocessors
yes,
for cell phones.
they didn't make the, yes.
If they had made
Qualcomm crushed them.
they Qualcomm crushed them.
Yeah.
Okay.
Hmm.
So anybody can get blindsided.
Hmm. Do you think Tesla has reached that kind of a moment? Or because what's happened, the real reason why Elon Musk is angry with Trump is, and the Republicans is, he's like, dude, I spent so much money putting you guys into place, and you guys have backstabbed me by removing the cash cow, which was all this green money which was coming to him, and he was selling these credits to the other companies, and he was enjoying all that free cash. Even when his cars wasn't selling, he was doing all right.
It was a carbon trading company.
Yeah. Now Trump has destroyed that business.
Yes. And also 7,500 credit you are getting, you are not getting anymore.
Yeah. Even in state level from California, that has also been removed.
Yeah. So you were thinking that it was a car company.
Correct.
It was not a car company. It was a credit trading company where they were trading on
This green credit.
green credit.
He found a way to create green credit out of nothing.
The thing, and he was selling it.
Yeah.
It is a storage selling. They have storage places for electricity drives and all that. So it is a very little. It's not a major car company. BYD is running circles around them. Right? So his entire business model has collapsed.
Okay.
Now all it requires is a Japanese company, which I'm sure Toyota will do one day, is to produce the same Tesla quality car at half the price. And it will strip him.
But there's another argument being made that all the data he's collected through all this self-driving car and all that, that he's actually sitting on a huge gold mine of data.
Plus the data. There are 350 billion Americans. Maybe there's a million Teslas. The real data is in India and China, and he has no access to that. Let me tell you this. I think there's a guy called who ran the Narayana Hridayalaya said, what an American heart surgeon performs in 10 years, the same thing is done in 1 year by an Indian heart surgeon. The population is simply so huge. So an Indian surgeon will have more experience than an American counterpart. The sheer numbers he gets to practice are more. So that's the real data is in India and in China, not in America.
Okay. So now let me pivot. Talk about companies like Salesforce and Accenture. These companies were the guys providing a lot of services to these Fortune 500 firms.
Yeah.
Now that AI has come, the reliance on Accenture and Salesforce will come tremendously down because Fortune 500 companies, for a fraction of the cost, can take care of all this. At least a basic right now they can take care in house. Do you think Accenture and companies like Salesforce, the writing is on the wall, or they will be able to absorb these AI tools? And which way can an investor see this?
See, you need an AI engineer, right? So, instead of what does TCS do, what does Accenture do? It rents people.
Correct.
Right? It rents somebody who knows C, it rents somebody who knows Java, it rents somebody various applications.
So I don't want to take them on the payroll.
Yeah, which you cannot take them on the payroll. It will rent AI engineers, it will rent business analysts.
Okay.
But however great AI is, somebody has to ask it questions.
Very true.
So the business analyst is the main business.
There's a lot of snake oil sitting there.
Yes.
There seems to be more hype than substance
So
in AI.
what this will do is it will make these guys more efficient. They can deliver more value with lesser number of people. That's all it will happen.
Okay. And moving to the last chunk of it is the Dutch company ASML and these other guys who are making the chips, the semiconductors, TSMC. You know, you were right said about Intel, but these guys are going to be the linchpins for the next jump, be it EV,
Yes.
be it AI. So are these the companies, though if they become diamond, we can say it justifies these kinds of prices because
No,
like
no.
Nvidia,
Nothing justifies the price. Right? Sooner or later it will catch up. Right? I bought a lot of TSMC last year. I am sitting on a lot of profits. Will I sell TMC? No, I won't sell TSMC. Did I buy ASML cheap? I bought ASML cheap. Right? ASML supplies machines to companies like TSMC.
yes.
I bought that. Do I have TSMC? Yes. Right?
So have we missed the boat then?
I do not know what is the valuation of TSMC today.
Okay.
I have not bought it in some time. So
No, it is astronomical. I mean, if you look at Nvidia, the only way you can justify Nvidia's prices if they have monopolized the world.
No.
And every single person needs one Nvidia. It's
No.
literally that, like a
It's
jockey.
now-
The joke
it's
that you
a-
make about jockey and
It's very clear that you don't need Nvidia to do AI. DeepSeek has shown you that.
Yeah.
DeepSeek has shown you that.
Yeah.
So Nvidia is overvalued. But whatever even low-grade chips has to be manufactured by TSMC. And even if other fabs come, it is companies like ASML which will supply the machinery. Or there's another one called Tokyo Electrocom.
Yes.
So there are other Japanese companies. There are some Taiwanese companies. Right? These guys will supply the.
Okay. So the last question then I would come to conclude with this is then looking at what you're saying, these companies are great companies. You managed to secure some of them at a great price a few years back. But thanks to Trump, he's creating an opportunity. Now, yesterday he announced 40% tariff on Japan. And he's announced some more tariffs, some crazy tariffs.
That's,
If there's a huge swing, uncertainty in the market, this is huge because right now the American market is very greedy, it's excessively greedy. They think everything is up, everything is up. Let's say it suddenly flips and there's a deep correction. Should we keep these at least on the list, saying these are great companies if they
of
come?
course you can keep because the time to buy Google was last year when everybody said, or the year before, 18 months back, when you guys made a big song and dance of Chat GPT, is the time I bought Google.
Yeah.
You remember that?
Yes. Yes.
I bought it for $80, $90.
Yeah, Google was very cheap then.
So you are asking me today after the horses built. 18 months back was the time to buy Google. Now everybody is criticizing Apple. I don't know whether justified or not. And a lot of Apple engineers are moving to Facebook. But I think Tim Cook is more solid than Mark Zuckerberg. So Apple may come to value.
Okay. So anyway, so this is the lay of the land as far as big tech and your growth stocks are concerned. Yes, they are great. Anand says yes, the products may be great. Two things you should keep in mind is the viability in future, because the problem in growth companies and these tech companies is 10 years from now will they be still relevant? Are they moving? You have to keep a very close eye and make sure it's in your circle of competence to understand what they're doing and you're following the trend in the technology clearly. Second, he says the price you enter in makes a big difference, like what he said about Cisco. 2008, you entered Cisco. You might have waited a very long time to come back to where you were, or you might be still waiting out for it to come back where it was. So that is a very important point which he makes, which he has very eloquently said. So the next tomorrow we'll be talking about bank and fintech and some Japanese companies too at that point of time. So is it a good time actually then looking at the current market?
Price is what you pay, value is what you get.
There you go.
So at the end of the day, the company may be great. Today I may not buy in Google, but I bought Google 18 months back. The same Google. If they break the search, the Google may fall, I may buy some more. Right?
Yeah.
So if Apple drops, I'll buy more Apple. Apple is a consumer company, not a track company. Amazon is way, way too expensive. So it is too much of a profit. At the end of the day, the valuations have to justify, not the technology.
Correct. So anyway, I hope you enjoyed the video today. It was fun having Anand back on the channel. Please do comment below that how much we enjoy having Anand around. and that way I can drag
And
in
if you
some.
want to buy American stocks, and I have said this several times, you have to have a minimum amount. Do contact Vinod on
Yes, catch me on Instagram,
Instagram, and he will
and
tell you what
yes,
to do.
like Anand said, the minimum to for the numbers to do it. Like I said in a previous video, which I worked for you guys out, the minimum is to around looking at 50,000 rupees a month. Then only the transaction costs, the exchange cost, everything put together comes to a point where it is profitable for you to even think of it. Otherwise, it won't make any sense. Anyway, thank you for watching Be Rich today. I hope you have a wonderful day and had a wonderful evening. We'll see you again tomorrow, where we pick up where we left off with finance companies. Thank you.
Thank you for watching Virich. If you like this video, send this video to your friends and relatives and have them take a look. Do not forget to subscribe to our channel and press the bell notification. If you do not press the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Virich.